Hello everyone, this is SurajBaviskar. Welcome to my YouTube channel SurajBaviskar Trading. Today I am very happy and excited because our family member, youngest family member, Parth is having his birthday. And happy birthday Parth, and this episode and this video is dedicated to you. So today we are going to understand the contract note of our trade. So guys, you might be doing a lot of trading, but you might not have given a close attention to your contract note. So in order to understand each charges and other things in a contract note, so today we are going to review on this one. So just have a glimpse or actual snapshot of actual contract note summary here. So you can see the total amount which pay in and pay out obligation is there. And if you see at the bottom of the summary of the contract note, net amount receivable or payable by client, so there is a difference, and this difference is because of a lot of different charges like brokerages, exchange transaction charges, IGST, security transaction tax, SEBI turnover fees, stamp duties, etc. So in order to understand how much money you will receive at the end of your trading session, whether you are making any profit or loss, irrespective of your profit or loss trade, you have to pay these charges to SEBI and exchanges and broker. So we'll move on and we'll understand what is exactly contract note is, and what are the vital informations are involved in the contract note, and how to understand that one, and what are the different charges are levied on a equity market on NSE stock exchange. Okay, so what is contract note? The contract note is the legal record of any trade made by you, me, or any client via stockbroker, online or offline, on a stock exchange like NSE or BSE. So that is the contract note, and contract note of a particular date confirms the trade conducted on that day by you or me. Okay, so today we are going to discuss on the contract note of equity market for intraday and delivery, that is overnight carrying position transactions. Okay, so there are different charges based on your transaction, whether you are doing equity intraday or equity delivery, that is overnight carry your position. So there are 6 or 7 charges are there, like brokerages, security transaction tax, transaction charges, stamp duty charges, SEBI charges, and IGST, that is integrated goods and service tax. And after that there are DP charges as well. So most of the traders are not aware of that one, so we'll go through that one and try to understand what it looks like, and we'll see again a glimpse of actual contract note summary. Okay, so moving on to intraday section. For brokerages, so normally 0.03% of a total turnover or 20 rupees per executed order, whichever is low, those are the charges levied by brokerages, and that brokerage firm is going to earn that much amount. So in case of delivery, broker are not charging anything nowadays because of a fierce competition. So for delivery equity transactions, you don't have to pay a single rupee to a broker, but other charges are there for delivery as well as intraday. So moving on to next section, that is security transaction tax, that is STT. So security transaction tax is 0.025% on the sell side. So only one side, which when you purchase something for an intraday and when you are scaring off your position, that is when you are selling your position. So on sell side, that is only one leg, you have to pay 0.025% of total turnover. Okay, and for delivery you have to pay 0.1% on buy and sell. So total 0.1%, which is relatively high for a delivery transaction, but for intraday it is very less. So you can think whether you want to carry over your position or you want to scare off your position in intraday, depending on this security transaction tax. Moving on to transaction charges. So transaction charges for both intraday and delivery are same, that is 0.00325% of total turnover. So it is fixed irrespective of you are doing intraday trading on equity or delivery trading on equity. Next portion is stamp duty charges. So you guys might be aware that whenever you are doing any financial transactions, you need to pay stamp duty charges to a government. So stamp duty charges in case of equity intraday is 0.003% or rupees 300 per crore on buy side. For delivery equity transaction, you have to pay stamp duty of rupees 1,500 for per crore on buy side or 0.015%. So just have a look at this one, stamp duty charges. What are the different stamp duty charges are levied on your transaction? Understand this one and come up with your strategy or your plan. Next charges are SEBI charges. So SEBI, which is governing stock exchanges, they are charging rupees 10 per crore. If your turnover is above 1 crore for equity, then they are charges 10 rupees for SEBI charges. Okay, next is very important, GST. So IGST, there are different type of GSTs like CGST, that is Central Good and Service Tax, SGST, that is State Good and Service Tax, and IGST, that is Integrated Goods and Service Tax, which is nothing but a sum of or addition of Central Goods and Service Tax plus State Goods and Service Tax. So in trading purposes or in stock market, IGST is applicable, which is 18% on total, that is brokerage, SEBI charges, transaction charges. So they are levying or they are charging 18% on some of these three. Okay, so understand this thing. And then there is one more charges which you have to pay to your bank account for a depository participant charges, that is DP charges, which is 20 rupees per GST per scrip or stock. When you are selling that one, if you are having in your portfolio, let's say 10 stocks are there, so you have, and you are squaring up all 10 stocks from your portfolio, that time 20 rupees plus GST per stock, that is 20 in plus GST into 10, you have to pay to your brokerages or DP, NSDL or CDSL, whatever the case in your case. Okay, so these are the total charges which SEBI or which stock exchanges are charging to you, and after deducting these many charges, you will get the net amount into your demat account to bank account. Okay, and there are some vital information apart from the charges which is present on your contract note, like SEBI registration number of your trading member or sub broker. So whatever broker you are working with or you are purchasing and selling your stocks, so that broker is having one number which is provided by SEBI, so that number will be on the top. And then your trade details like trade order number, then traded security, traded quantity in that security, what price you have purchased that one, what price you have sold that security, the time of execution of that trade, brokerages and service charges. So these are the total information which you need to understand on a contract note, so that your concept will be clear and you will be clear what amount you are expecting from your broker after you are winning or losing position. So just let's have a quick look after understanding this on actual contract note, which I am showing here. Pay in amount is something around 30 lakhs 10,949.35, which pay in, which is open. That means I was expecting this much of amount into my account after deducting charges like taxable value, or that is brokerage 728 rupees, exchange charges is 744 rupees, then IGST is 269 rupees, security transaction tax, which is very high in this case because of a turnover, 5,340 rupees for a single day, and then SEBI turnover fees is 22 rupees 22 paisa, and stamp duty is 288 rupees. So after deducting this much of amount, I was expecting to get 30 lakhs 5,057.44 rupees in my account. If this amount is covered in a bracket, that means I have to pay that much of amount to a broker. So this is all from my video today on understanding of a contract note. I believe you guys might have understood or got some additional information or insight on contract note. Hope you will have a clear understanding this before doing your transaction. And this video is for educational purpose. Guys, I am not a SEBI registered advisor, so this is just for education purpose to increase your financial awareness. Once again, happy birthday Parth Beta. Happy trading. Thank you.